Hello friends, welcome to my YouTube channel Accounting and QuickBooks. In this channel we shall discuss and understand various accounting and taxation topics, and we shall record the transaction in QuickBook Desktop. So I hope that you find this channel useful for you. So let's start our today's topic, which is about sales tax. It is also called value addition tax. And what is sales tax? Sales tax is an indirect tax payable to government tax collecting agency on sales of goods or services made by a person. The person shall charge this tax on his sales invoice made to his customer, and upon receipt of amount he shall pay the sales tax to government agency which is collected by him from his customer. But this tax is possible to next person, that is the person who has purchased the goods shall pass this tax to his customer, and the final consumer of the goods or services shall bear this tax expense. Now the sales tax can be of two forms. One is output sales tax, which is the amount of sales tax charged by a person on his sales tax invoice made to his customer. And at the same time, this tax is called input sales tax for the amount of sales tax paid by a person to his vendor upon recording of purchase bills. So sales tax can be called input or output sales tax from the perspective of seller and buyer. And how can I determine my sales tax liability or any person's sales tax liability which is payable to government agency? Is output sales tax minus input sales tax, that is sales tax collected by a person from his sales tax invoice and subtracted from the input sales tax which he has paid to his vendor on his purchase bill. I've also prepared the illustration for you guys, so let's check out our illustration. In this illustration we are general traders, that is person B in this supply chain. This supply chain consists of four persons. Person A is the manufacturer of a product called chair. Person B is me, that is general traders. I shall purchase these chairs from person A, that is the manufacturer, and shall sell these chairs to my customer, which is person C, and person C shall again sell these chairs to his customer, which is person D. But person D is the final consumer of these chairs, because he shall not sell this chair, he shall use it for his own consumption. Now check out these calculations. Person A is the manufacturer. He has manufactured 50 quantity of chairs, and now he is selling this 50 chairs to me. This is his sales tax invoice. The quantity is 50. The unit price which he has set is 100, and his total bill is 5,000 excluding sales tax. He shall charge sales tax at the rate of 17%, which is the general sales tax rate applicable in Pakistan, which comes to 850, and his total sales tax invoice will be of 5850, that is amount of sales plus sales tax. This sales invoice from the perspective of person A is the purchase bill for me, that is general traders, this is me, and I shall record this purchase bill. I shall record the purchases from the amount of 5,000 and shall record my input sales tax 850, and I shall pay the total amount of 5850 to person A, as we have already discussed in that the input sales tax is the amount of sales tax which a person paid to his vendor. So I have paid 850 as my input sales tax. Now for determination of sales tax payable of person A, we shall apply the formula. And what is the formula? Formula is output sales tax minus input sales tax. So for person A, which is my vendor, he shall calculate his sales tax liability. His output sales tax is 850, which he has charged on invoice, that is 850. His input sales tax is 0 because he has manufactured this product. So there is no input sales tax because he has not purchased these chairs from other vendor. So in this case, his sales tax payable is 850, 850 minus 0. So this 850 is payable by him to government tax collecting agency. He shall pay this 850 sales tax, and he has not paid from his own pocket because he has charged this tax to me, that is his customer. I am his customer, general trader, and this is me. When I receive these chairs from person A, 50 chairs, I shall sell it to my customer person C. Now I want to make some markup or margin on this profit because everybody want to make profit. So I shall not sell it on my unit cost, which is 100. I shall sell it to 120 because I have added 20% markup. So there is a good profit for me. So I am selling this product 50 quantity. I have set unit price of 120. My total invoice is 6,000 excluding sales tax, and I shall charge the sales tax at the rate 17%, which comes to 1020, and my total invoice is 7020. Now this sales tax invoice is from my person's perspective is purchase bill because he is purchasing this chairs from me. So the amount of sales tax which I have charged is 1020 is input sales tax for my customer person C. Now I shall determine my sales tax liability. In this case, my sales tax output sales tax is 1020 because I have charged it to my invoice. This is 1020, and my input sales tax 850, which I have recorded on my purchase bill. This is 850. This is input sales tax, and from output sales tax I shall deduct my input sales tax, and the resultant is 170. This 170 is the amount of sales tax which I shall pay to government agency, and I shall and now my customer person C is also a trader. So upon receiving of these chairs from me, he shall sell these chairs to person D, which is his customer. Now person D is the final consumer. He shall not sell these chairs subsequently. So here is the person C invoice, 50 quantity, unit price is 150, total bill is 7,500. Person C shall charge sales tax at the rate 17%, which comes to 1275, and his total invoice is 8,775. Now he has charged sales tax 1275. So this is his output sales tax, and he has paid me 1020 as sales tax to person B. So this is his input sales tax. So his sales tax payable is 1275, output sales tax minus input sales tax 1020, and resultant tax is 255, which he shall pay to government agency. Now note that the sales tax payable on each stage of this supply chain is payable to government agency on value addition basis, that is increase in the sale price. That is why this sales tax is sometimes called a value addition sales tax. Now person D is the final consumer. He shall not pay any amount to government agency because he has already paid 1275 as a sales tax, and in his book he shall record this 1275 as a cost or expense. he shall not record this input sales tax as a advanced sales tax, because he has no sales to adjust this sales tax input. Now we shall record these illustration in QuickBooks desktop. From my perspective, because I am person B journal trader, so I shall record two transactions. The first transaction is the purchase bill, which I purchased from person A. This is my purchase bill. And then shall I record my sale invoice to customer C, person C, which is my customer. This is my sales invoice. And then we shall record our sales tax liability, or adjust our sales tax liability, which is 170, and shall pay to government agency. So let's start to record these transactions in QuickBooks desktop. This is the QuickBooks desktop home screen. Now first you shall ensure that you have this item chair in your item list. I have already created this chair. That is this chair. It is my inventory part, and you have to open person A as your vendor and person C as your customer, which I have already opened. And then please ensure that you should have an account called input sales tax in your other current asset, because at the time of purchase we shall record this 850 as my input sales tax, which is my current asset, because I am paying this sales tax in advance, and I shall adjust this 850 from my output sales tax. So let's have a look at chart of account, whether I have this account or not. And here is my other current asset. I do not have any account of input sales tax. So guys, please first create this account. I shall give it to number 12,200. Go to account, click on new, and choose other account type, and choose other current asset, then continue, and I shall give it number 12,200. You can assign any number, whatever you want, and this account name is input sales tax. Sometimes people call it advanced sales tax. Whatever the name you like, you can choose. I shall copy the this account description in there and save and close. Click the save and close. So now I have this account, input sales tax, and sales tax. The QuickBooks sales tax management do provide the recording of sales tax on per sales invoice, but this sales tax management do not provide to implement the input sales tax on vendor bill. So what is the option for me? I shall have the option to create a new item, and my new item is create new and call it other charge, because if you select the item as type as sales tax item, then you should not be able to apply it on your purchase bill. We shall see it later, but first we are creating sales tax input item as other charge. So name it as input sales tax, or whatever name you want to like, input sales tax. And this I shall copy the description there, and this account should be mapped with this item should be mapped with the account name input sales tax. This is my input sales tax. I have mapped this account, this item to my input sales tax account. So click OK. Now I have an item called input sales tax, that is other charge. Now I shall create another item as output sales tax, but this time I shall select the type as sales tax item, because QuickBooks do provide the option to record sales tax on purchase sales invoice. So this I shall call it output sales tax, output sales tax, and I shall copy the same to description. And so my rate is 17% applicable in Pakistan. So and government tax agency, there is currently no government tax agency which I have added, so I shall create a new tax agency and I call it to FBR, Federal Board of Revenue. And the rest of the information I am not filling, but you should fill all this information. Click OK, and I have created this sales tax agency. Now I have all the ingredients to record all these transactions. Now go to, I have received the shares. Remember my illustration, I am receiving 50 shares from my vendor person A. So I shall go to record these from receive inventory with bills. So select this and you will go to this screen. There you should first choose the date. I am using the current date, that is 17 March, and I am purchasing these shares from person A, because in my illustration I am purchasing this from person A. So I am not writing an address. You can write the address and whatever information you like. And bill due date is 27 because I have a setting. You can change it, but currently I am not changing it. However, I shall write a memo, purchase of 50 shares from person A. Now go to their item tab, select my item, shares. This is the item. I have already created it before exercising this, and I am receiving 50 shares, so I shall enter the quantity 50. I have already set it cost at 100. So without sales tax, the total purchase invoice is 5,000, which is in accordance to my illustration, that is 5,000. Now I shall record the input sales tax. Now input sales tax is 850. We have created an item called sales tax output, but this sales tax output cannot be mentioned here. So you have to select the input sales tax as other chart. This is input sales tax, and you shall record 850 there. Total amount is 850, so you shall write it in this column. Now my total bill is 5,850, which is in accordance with my illustration, that is I have completed this transaction in QuickBooks. So I shall save this transaction, save and new, and I shall advise to you guys to please check the journal entry of each transaction which you recorded in QuickBooks. So in this case, go to previous record, that is the purchase invoice. Go to reports there and select the transaction journal there. Please see this transaction journal. I have purchased inventory asset of 5,000 shares. That is my input sales tax, which is my other current asset 850, and now accounts payable is 5,850. So I have correctly recorded these purchasable. I can also check it from my reports. So let's go to reports, go to company and financials, and go to balance sheet standard. This is my balance sheet. This is my current inventory asset. Double click it and it will show you the recording of purchase of asset. This is my asset. I have purchased 50 shares. Go to input sales tax, that is input sales tax, and it will show you the transaction of input sales tax, that is the input sales tax. And you can also check the accounts payable there. This is the accounts payable 5,850, and the name of the vendor is person A. So I have successfully recorded these transactions on QuickBooks. Now I want to sell these 50 chairs to person C, which is my customer. So go to create invoice, that is create invoice, and select the customer, which is person C there. Select the date. I'm recording it on 17th of March. You can change it, and select the item code there, which is chairs, and select the quantity, which is 50. So my total bill is 6,000 because I have set it the selling price at the rate 120, that is 120. So I shall record the output sales tax there and go to next column, select the item code. Now you can see that here it is, output sales tax. Select this and it will automatically create the sales tax 1020 at 17%. Check it out from my illustration, that is there 1020, and the total invoice is 7020, that is 7020, and the output sales tax is 1020. So save this transaction. I'm saving it. I'm ignoring these spelling mistakes. I've recorded the sales tax output, and I shall check it from my reports. Go to company and financial and go to balance sheet standard and check it out. Here it is, in other current liabilities it is sales tax payable. I have recorded this output sales tax. Please note that I have not created another account called output sales tax because I shall use sales tax payable as my output sales tax, and I shall adjust my input sales tax from this account. So new account is not needed there. You may record it in a new account called output sales tax. It's up to you. Now also check what are other transactions. Go to reports, company and financials, and profit and loss standard. Check out its sales. That is the sales which I have made, 6,000. Please remember that the sales shall be recorded with the amount excluding sales tax, because this 1020 is my output sales tax. It is not my sales. I am collecting this sales tax on behalf of government agency, but I shall pay this amount after adjusting my input sales tax on my purchases. So we have successfully recorded this transaction, that is invoice. Now it's time to adjust my output sales tax with my input sales tax to record my sales tax liability. So first go there, you can adjust the taxes there. Go to, that is not appearing on my icon bar, so I shall customize it. I shall add the adjustment of tax, that is sales tax, adjust sales tax, and click OK, and let go into there. I am adjusting its position. I want to have this icon, and click OK. Now go there and check out the adjust tax. So click on the adjust tax, and at the end of the month I want to determine my sales tax liability. So select the date 31st March, although it is in future, but for the sake of example I am doing it. Please select the sales tax vendor, which is FBR in our case, sales tax agency, and adjustment account. You should select the adjustment account as input sales tax, because I want to adjust my input sales tax from my output sales tax, and my sales tax liability shall be decreased by the amount of input sales tax. So I shall select the reduced sales tax by, and I shall enter the amount manually. I shall enter my input sales tax, which is 850. So I shall record 850 in this column, and memo is sales tax adjustment. Then click OK. I have adjusted my sales tax input. Go to reports and check whether our account has been adjusted. Go to company and financials, go to balance sheet standard, and change this balance sheet date to 31st March because I have adjusted this tax on 31st March. Now you can see that in other asset there is no input sales tax appearing in this list, because input sales tax account is now 0, so it is not presenting there. You can check the sales tax payable account. It is showing 170. Click on it and it is showing my adjustment, and select the date from 1st March, and you can see that first I have recorded my output sales tax on my invoice 1020, and then I have adjusted my input sales tax of 850 from my sales tax payable account. Now my sales tax payable is appearing as 170, which we have calculated in our illustration, that is person B, which is me. My sales tax liability is 170, so I have correctly recorded these transactions in QuickBooks. So please, now we want to also check the account of input sales tax, because it is not appearing in balance sheet as on 31st March. So to check this account, transaction in account, and shall go to chart of accounts, and there it is, input sales tax. I shall select it, right click on it and make a quick report. Now you can check the transaction in this account. On 17th of March I have recorded my input sales tax on my purchase bill 850, and on 31st March I have adjusted this 850 input sales tax from my output sales tax liability. So my input sales tax is now 0, and I have to pay the government agency 170, which can be paid by through write a check or pay sales tax, whatever you want. So guys, this video is all about the sales tax, the recording of input and output sales tax, the adjustment of input sales tax from the output sales tax, and how to record these transactions in QuickBooks. So I hope that you guys find this video helpful, and please subscribe to my channel, press the bell notification icon, and we shall bring some good quality videos on accounting topics and recording in QuickBooks. And until then, goodbye.